And welcome, it's Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. Another bumpy period for the markets last week, but a lot of new developments. Let's go ahead and start out with some of those news that drove price action last week. We did have a nice uptick earlier in the week as economic data came in. The Bureau of Labor Statistics, they revised job growth quite a bit lower, and that did give the markets a boost. FOMC notes on Wednesday are pointing at that time toward a possible rate cut. Based on those notes, that was also deemed good news on Wednesday. And then on Thursday, we did get weekly employment data, and that was mixed. We saw a sharp pullback in the broader markets, certainly concerning for those that are active traders. However, today's rally did in fact keep us in very, very strong uptrend. We did hear from Fed Chair Powell from where he is in Jackson Hole, and he is definitely on the path of creating a rate cut as we move through toward the end of this year. Investors are looking for a 1% drop. So I'll share with you what the impact there on the broader markets was throughout the week. We did see some pretty sharp movement into newer areas. And I'll also share with you where that weakness was. Earnings also came into play last week. We'll look at that. And from here, let's go ahead and take a look at those broader markets and see where did we close for the week. And here we are with the daily price chart of the S&P 500. And I've highlighted here that prior high in price that took place at the end of July. And we are points away. We are very close away from approaching and potentially advancing above that prior high. And that would be good news. It has been viewed as it could be an area of possible upside resistance. So far, so good. But we would like to get up above that, similar to this period back here in June, that allows this broader index to trade higher. Of note here, that RSI in positive territory and your MACD in positive territory heading north. One of the many developments last week is the fact, so if you look at the S&P, it was up almost 1% for the week. Here we are with a view of the equal weighted S&P, and it was up twice the broader S&P 500. This is all about the fact that those mega cap Magnificent Seven names are generally underperforming. We will take a look at them as we move through today's show, but also of note is the fact that we saw broadening out. So I will share with you those areas that are picking up quite a bit and turning constructive. We do have a positive RSI and MACD on that equal weighted S&P as it hits a new high. Also wanted to share with you a view of the Nasdaq, and it traded this week very much in line with the S&P 500. This is unlike prior weeks where it really outperformed. Thursday's pullback definitely did a bit of damage, if I may, although we did end the week up a little over 1%. We have that bullish RSI and MACD, and we are still very much in a confirmed uptrend. But of note, the tech-heavy Nasdaq, certainly relative to recent weeks, is really not showing that really strong momentum that we have seen here in the recent past. Let's go ahead and take a look at the underlying 11 sectors in the S&P 500. Many of you may remember that over the last at least 4 weeks, we have seen a move of these more defensive areas up to the forefront of this view. This is a 2-month daily price chart, and I've sorted it by RSI. That's a relative strength indicator. So in essence, your stronger groups are sitting up here at the forefront, and then your weaker areas are down in this lower quartile. And we can see that those defensive areas of the broader markets are still up here at the forefront, with each of these areas outperforming last week. Certainly the strongest group was real estate. That would be REIT stocks. And a lot of that advance took place this week. Overall, the group was up 3% 0.6%. You can see that gap up. We are approaching an overbought position there. However, the MACD still points to further upside. Nice high volume on that rally. This is all about the reduced interest rate outlook, which is generally quite good for REIT stocks. Also, we did see movement in staples up about 1.7 relative to the S&P up 1%. This is another phenomenon that takes shape as interest rates are due to decline. You will oftentimes see a move into higher yielding areas of the broader market. Staples would certainly be among them to capture some of these higher rates in those areas. Likewise with utilities. Utilities did not were outperformed, but very nominally. Let's move through and take a look at another area that was really quite strong this week, but it's still in that lower quartile. That is XLY. This is the consumer discretionary sector, and you can see the advance. It was up over 2.5% last week. We did get earnings from Target, which helped other retailers and other names as well, which we will take a look at. Now, this is something I've talked about in my twice weekly MEM Edge report. And I believe last week's show as well, the concept that this move into consumer discretionary, despite this sharp advance, is still relatively early. Take a look. We have this MACD just now entering into positive territory, likewise with that RSI. And as growth prospects, the prior week we had Walmart come out with very good numbers. As the growth prospects continue to expand, this, from my work, is an area that has a lot of near-term and potentially long-term potential. And let's take a look at some of these other sectors that are here. You'll see the S&P 500 squarely down in this mid area, but you do want to take note that technology, and I did mention this, it was a relative underperformer. It was up 1.1% in line with the S&P 500, but on Thursday, a very sharp drop. In our next segment, I'll share with you where that drop really was pronounced and why. But we can see overall the uptrend is still very much in place. It's not a sell tech and go away. It's just a remark and an observation that we are seeing a bit of volatility. Again, I'll share with you precisely where that weakness is emanating from. And then also of note here, we can take a look at cyclical areas on the move higher. This is XLI, and we can see that it did break out last week. In the next segment, again, let's go ahead and jump right there now, because what I want to share with you is beneath these 11 sectors, let's take a look at some of the sub-industry groupings and the activity there that really drove price action last week. I do have ETFs that I use that are super helpful as far as embracing where that strength is, 2-month daily price chart view with that RSI. And let's take a look. XHB, this is the S&P Homebuilders ETF, and you can see that it had a sharp advance. The group was up over 8%, and there were dual reasons for that. Certainly one of them is a declining interest rate environment, but more importantly is strong earnings from companies such as Toll Brothers, which is on my MEM Edge suggested holdings list. And then today we got very strong new home sales data, up 10%. So all of that combined is driving this group higher. And take a look. It is a group that pulled back very sharply back here with that market pullback. But again, I would argue that we are relatively early in this advance, and the MACD just having that crossover and relatively in low territory. Also up here at the forefront, another group that had a stellar day today, but then the week overall as well. This is KRE, the regional banking ETF, up 5.1%. It is an area that will benefit if we see a decline in rates, because theoretically you will see a pickup in lending activity, whether it's mortgage or otherwise. And take a look, another area, black line up through the red this week with an RSI that's trending upward. And I will take a look at, there were two names in the banking area that I shared with you last week as that group began to firm up. and I'll share a newer name with you as well. Also moving through these groups of note, small caps. This is another area that fares well as interest rates decline. Statistically, these smaller companies are going to be more leveraged, and as rates decline, they'll have the ability to lower their debt levels in a declining interest rate environment. You can see the move today up 3%. The group was up over 3.4%. And again, early in that advance. So lots of potential opportunity shaping up out there. One item I did not note, however, is next week we will get core PCE data. This is the Federal Reserve's highly used gauge for inflation. So we may see some volatility surrounding that next week. And then also of note is the fact that Nvidia will be reporting their earnings, and that those two items are very critical as to how the markets will shape up next week. Let's go ahead from here and take a look at that semiconductor industry group. You can see it's in this lower quartile, and the overall group was an underperformer. It was up, it was actually flat for the week. This is SOXX Semiconductor ETF. We're not quite in bullish territory with this RSI, and I'm sorry, MACD, and the RSI is just in positive territory. Now, this is where a large part of the weakness is taking shape, and it is fairly well deserved because the semiconductor group, while it is cyclical and it should fare well in an improving economic backdrop, next week we get Q2 GDP revisions, but it has been a very mixed earnings season. So you will want to note there are the haves and the have-nots. From here, we can take a quick look at Nvidia's chart going into those earnings next week, and you will see that it, by and large, had a back and fill. It was up about 3.5% for the week, sitting up here really quite constructively. You can see that RSI and MACD in positive territory. So certainly good news as it relates to the chart going into earnings. But we've oftentimes have seen volatility as we take a look at what may be anticipated relative to AI spending and anticipated growth. But I will say the chart certainly looks quite constructive, and it is viewed next week's earnings release will be very market moving. So let's take a look at some one other area that I wanted to share with you. This is XRT, that retail ETF, and I did talk about the group faring well. It is in a bullish position here. However, it was up in line with the broader markets. This is another area where you will want to be selective. Not all stocks are faring well and participating in that move into consumer discretionary. Certainly the housing stocks would be a bright spot there. So let's go ahead from here and take a quick look at those Magnificent Seven and beyond names. This is a 2-month daily price chart view, again, with that RSI, and really highlighting the fact that some of these mega cap names are not faring well. This is Microsoft. You can see we did not get into that bullish position there with that MACD RSI in negative territory as well. And then likewise here, taking a quick look at Amazon, we are not getting the the momentum or the buyers coming in for these big growth names. A lot of these, certainly AI facing names, came out with reports that they are going to be spending quite a bit on AI. And of course, that's going to impact their bottom line. Meta faring a bit better. It is here in positive territory, but of note again is the fact that these mega cap growth names are not looking very attractive. So from here, let's take a look. XLY, I talked about that group having a number of opportunities, any number of names. We can take a look at a couple of areas. First off, you will want to be aware, this is something I talked about last week, but of note are peer stocks that report earnings and have really bullish responses. This is Cava Group, CAVA. It is designed around Chipotle's model as far as building your meal out, but it is Mediterranean food. But we can see this gap up. Take a look at that huge volume. Oftentimes you will see peer stocks in turn also experience nice moves. This is Wingstop, WING. And it did have a rally today. It's back up above that 50-day simple moving average, not earnings related. They did report good numbers earlier, but take a look. This high volume MACD now in positive territory. That is a great looking chart. We can also take a look with that Homebuilders move at a name such as Home Depot. And it did execute today a base breakout. And we also did get good volume. We also have nice bullish momentum indicators there as well. Now, of note, we do have several companies that will be reporting their earnings next week, and be on the lookout for that peer move as well, depending on their results. Abercrombie and Fitch due out on Wednesday, a really down and out name. Lululemon will be reporting on Wednesday as well. So that will be of interest. And then Gap, a real headliner in the retail space, is reporting on Wednesday as well. So you will want to put them on your watch list, as they could potentially fare well, and you'll want to be aware of other names in that group. We also talked about KRE, banking stocks, and their big move. Let's take a look at a couple of names here. And first up is Zion. These companies also have nice high yields. Zion has a 3.3% yield, and the stock is trading at 11 times forward earnings. What I like here is that MACD just now crossing into positive territory. You'll want to use this prior rally period as your precedent. Another name, bigger Wall Street firm, Truist, TFC. So this is what you will see in a lot of these names, where they were trending upward and then today experiencing a big move higher. Let's take a look at one other name here. Actually, we can look at the two stocks that I shouted out last week as putting on your radar. WAL was one of them. This is Western Alliance, a regional bank, and we can see that it had turned positive and was marking time before today's sharp advance with that nice MACD crossover. So this is another vibrant area that I would suggest you drill down into and take a look. A couple of other names from last week that we were looking at based on economic data that came out that showed that auto sales came in quite strongly. Here we are with Carmax, KMX, not the prettiest of charts, but it is very close to executing a base breakout. Black line up through the red. And also last week, I did highlight CVNA as a name of interest, and it does remain in a nice confirmed uptrend. So this is that potential move into areas that are going to benefit from a declining interest rate environment. As we all know, most people do take out loans for their vehicles, so we could see a nice advance there. One last name as a potential outlier that could, actually, this is a name that will benefit from employment numbers and an expansion there, RHI, and I'm highlighting it because it is closed back above this 50-day simple moving average. We now have a positive RSI, that MACD not quite in positive territory yet. So it is that type of chart that we can keep an eye on, certainly relative to the broader markets. That's it for this week, and I certainly wanted to highlight again the fact that that equal weighted S&P 500 is at a new high, and this is really good news. You want to see a broadening out of participation, which is unlike the beginning of this year when it was very, very focused on those tech areas. And then also of note is the fact that we are definitely on a path for a declining interest rate environment. However, next week, key PCE inflation data will be reported. Also, Nvidia will be coming out with those numbers. And then the fact that semiconductor stocks overall have been weak. Their earnings have not been strong across the board. So you will want to keep that in mind, as well as the weakness, again, in those mega cap names. that's it for this week. Everyone, have a great weekend. I'll look for you here again next Friday.